Insurance versus private pay? Well, that's the age old question for any therapist in private practice. In today's video, we're going to talk about the ugly truth of accepting insurance and the consequences if you do. So stay tuned. Hi, I'm Valerie, and welcome to my channel. This is where we talk all things private practice and marketing. So if you want a full practice, a steady stream of referrals, and more private pay clients, you are in the right place. If you have not had a chance yet, hit that subscribe button, tap that bell. You do not want to miss a single tip or strategy for a full and thriving practice. In today's video, we're going to talk about the realities of accepting insurance. I like to call it the ugly truth. So make sure you listen up and make sure you watch until the end because we're going to do some real math so you understand the real consequences of accepting insurance. And we're also going to talk about some alternative strategies for a full practice, a thriving practice, and more private pay clients. Listen up. Let's start by talking about the pros, because let's be honest, taking insurance is not all bad. We have to be real here. Number one, the biggest pro of accepting insurance is that it is a highly effective marketing strategy. That's exactly what accepting insurance is. It is a marketing strategy. It gets you in front of a large pool of potential clients who are actively seeking a therapist. That's how I want you to think about insurance. If you are building a private practice, especially if you are starting out, insurance is a marketing strategy. It's an expensive marketing strategy. We'll talk about that in a few minutes, but it's a highly effective one. So put that in the pros column. Pro number two, clients who are looking for therapists who accept their insurance tend to be a little bit less discerning or a little bit less picky than clients who are paying out of pocket. Now, I guess we could get a little philosophical about whether that's a good thing or a bad thing for clients, but from a marketing perspective, that is a pro. What does that mean? That means as a therapist, you don't have to try as hard to market to those clients. So your job in marketing is a little bit easier, to attract insurance-based clients than it is to attract private pay clients. And so I would put that in the pros column, especially when you're starting out and you're still leveling up your marketing game. So that's a pro of accepting insurance in your private practice. Pro number three for accepting insurance, it feels really good. We cannot discount that. When we accept insurance, we help keep mental health care more accessible for our communities, and that just feels really good. For the vast majority of us, we entered this field because we want to serve, we want to help, we want to make mental health care more accessible for people, we want to reduce the stigma. So accepting insurance feels really good. Now, let's be real. You may not be able to accept insurance in your private practice because the reimbursement rates are too low for you to keep your doors open. This might be something that feels really good, but that does not make sense for your private practice. And we will talk about this when we talk about the cons. Now, we have to talk about the ugly truth of accepting insurance. It's not all unicorns and rainbows, y'all. There are a lot of cons when it comes to accepting insurance. Let's go ahead and dive on in. Here's the number one most important con of accepting insurance. It is expensive. It is wildly expensive for you to accept insurance in private practice. So let's talk about why accepting insurance is so expensive. It is so expensive for a couple of reasons. Number one, opportunity cost. Let's talk about what that number means. When we're talking about opportunity costs, we're talking about lost income or income that you could have made if you were seeing private pay clients instead. So let's say you get reimbursed $120 a session. And if you had seen a private pay client, you might have seen that client for $200 a session. So that's $80 in lost income every time you see an insurance-based client. Now, that might not seem like a lot until you start to add it up. So that could be 100 sessions a year, 200 sessions a year. Start to add those numbers up, and that is quite a bit of lost income. The second expense that we need to consider, or another angle to look at, is we need to look at it as a marketing expense. Remember earlier, I asked you to consider insurance as a marketing strategy. When you accept insurance in your private practice, what you're actually doing is you're using insurance as a marketing strategy to get you in front of a lot of potential clients. There are a ton of other marketing strategies that cost you significantly less money. than accepting insurance does. And that is not even considering any extra money that you spend hiring a biller, getting credentialed, or extra time that you spend making sure that your notes and your treatment plans and that your time spent actually billing and submitting bills is calculated, right? So we haven't even talked about any of those expenses. So this is the number one con of accepting insurance. The reality is it is expensive. So if you are considering taking insurance in your practice, you need to add these numbers up. So I encourage you, if you're considering accepting insurance in your practice, run your numbers first. I offer a free practice profit calculator. You can grab it at the link in the video description. Go ahead, do that right now. Make sure that you have that. It's going to give you a great start in running these numbers and seeing which insurance plans, if any, are going to work for your private practice. Let's talk about con number 2. Accepting insurance is incredibly risky. That's right, it is risky. Why is it risky? Because when you accept insurance, you are reliant on the insurance company to actually reimburse you. Have you ever heard of clawbacks before? Well, it's pretty scary. Here's what happens. If the insurance company decides that there is something wrong with your records, something suspicious about your treatment plans or your billing, they can audit your records and decide that you didn't actually deserve the money that it paid you, and it can require you to pay them back. So you're at risk for clawbacks. You're also at risk for just flat out not getting reimbursed. That's right. They can deny your claims. They can decide that your service you provided was ineligible to be reimbursed. Another risk is that that insurance company can run into any number of problems paying their bills, and you're stuck dealing with this. This happens all too often, where the insurance company runs into problems with their database, their billing system, and guess what? The individual therapist has to wait until that insurance company gets it sorted out. The insurance company does not care if you have to pay your mortgage, if you have to pay your staff, if you need to buy groceries, it does not matter. You will not get paid until they figure out their own problems. So you have to wait weeks, sometimes months, while they get their stuff figured out. This poses a huge risk to your private practice. Let's talk about con number 3. Last but not least, accepting insurance in your practice is also incredibly time consuming, even if you hire a biller, because at the end of the day, you are still responsible for making sure that everything is done correctly. That's right. You're the one making sure that all the I's are dotted, all of the T's are crossed. You're the one making sure that the treatment plans, the notes, the benefits authorizations, that the files are up to date. That is still ultimately your responsibility. That is time consuming. That is a lot of extra administrative work that gets piled on your plate. Time that you could probably be spending with clients. So that is the ugly truth of accepting insurance in private practice. Most clinicians want to accept insurance. We can't. We can't accept insurance from a financial standpoint, from a risk management standpoint, and from a time management standpoint. We cannot make it work. So I promised you, if you stay tuned until the end of this video, we would talk about some real numbers and we talk about some alternative strategies to insurance. Grab your calculators. Let's do some quick math. Earlier, we talked about some of the expenses, the extreme expenses of accepting insurance. Let's do some quick math. Let's go back to our earlier example. Let's say you are accepting an insurance-based client and you get reimbursed $120 per session to see that client. Okay? $120 per session. And your private pay rate is $200 a session. That's a pretty big difference. That's a difference of $80. And let's do a little quick math. Let's say on average, you see clients for 10 sessions apiece. So your average revenue for an insurance-based client is $1,200. And your average revenue for a private pay client is $2,000. Okay, so our difference, do the math with me, grab your calculator, that's $800. I make $800 more for every private pay client that I see. That's a pretty big difference in my practice. Now you're probably thinking, but Valerie, it was easy to get an insurance client. It's hard to get a private pay client. I hear you. You have to do a little more marketing to get that private pay client. We're not manifesting private pay clients out of thin air. But let's say you run Google ads to get that private pay client. Google ads tend to be a little bit more expensive in terms of marketing strategies. They're great. It's a great marketing strategy, by the way. So if you ever want to know what's a really good marketing strategy to fill my practice, Google ads. It's a great high impact marketing strategy and it's quick. Message me if you want to learn more about that. But let's say you're running Google ads and it costs you $300 to get that private pay client into your practice. $300 in marketing expenses. Ooh, that feels like a lot of money at first. But let's think about it for a second. So it costs you $300 to get that client in. What is 2,000 minus 300? 1,700. So your total revenue for that private pay client is $1,700. Your total revenue from that insurance-based client was $1,200. There's a difference. You still made $500 more from that private pay client, even though you had to run Google ads to get them into your practice. And that is not counting for the risk of accepting insurance, for any expenses related to a biller that you had to pay to bill that insurance-based client's insurance, not counting for any extra time that you had to put in to make sure that you were billing that insurance. You still made more money at the end of the day from that private pay client, even though you had to run Google ads to bring them into your practice. So if you are only using insurance as a marketing strategy to fill your practice, there are better strategies out there. Thank you so much for watching this video. If you liked it, if you found it helpful, if you want more, hit that subscribe button, give me a thumbs up, and drop me a comment. I will send you a link to all of my marketing freebies. See you soon. Happy marketing, y'all.